Hi, Richard. Hi, Danny.
Hi. Hello.
Today, I think we would like, you are international tax expert, and Danny, you are international immigration expert. So today we would like to combine your expertise together and then provide some insightful talking to our audience.
Sounds good.
Can you talk a little bit about yourself first, Richard?
Myself, well, I've been involved in taxation for well over 30 years now. I started out at the IRD. I did about 8 years there, ended up in investigations, and then became a chartered accountant. And for the last 15 or so years, I guess, I've just focused on doing tax-related engagements, particularly around land transactions and tax residency.
Cool. How about you, Danny?
I have practiced immigration law only for more than a decade. I'm really specialized in immigration law because we focus on business migration and also immigration appeal. Business migration includes employees of relocating business to New Zealand, where the senior management may apply for residence, and immigration appeals covers appeals to the Immigration Protection Tribunal, and also include requests to the ministerial intervention to the Minister of Immigration. I am the principal of DS Law based in the market. DS Law is the niche law practice dealing exclusively in immigration law. So I love and enjoy what I'm doing.
Cool. So I've got several questions that each of you can focus on. And the first question is, we all know that our kid with the travel restriction border closed, lots of our kids are ready for OE once the borders open. So everyone is expecting a big OE. So if I'm one of those kids who's going to OE, one of my questions might be, if I go out to OE for a year or maybe more, what should I plan or what should I prepare in terms of the tax or immigration side? Richard?
Yeah, well, that's certainly a very common inquiry I get as people going offshore, and particularly around whether they should tell inland revenue that they're going. You know, should they be asking the inland revenue to give them a non-residency determination? So I certainly think, you know, proactive is always good. So before you go, understand exactly what your ongoing New Zealand tax implications may be in terms of your residency status. So I guess one issue that's quite often overlooked is, while people understand there's a black and white sort of physical presence absence test, which is quite easy to manage, of course. A lot of people don't realise that New Zealand's overriding residency test is based on what's called a permanent place of abode. So do you have an abode available to you in New Zealand? And if you do, then what's your permanency of connection to that abode? So from my perspective, when I'm advising clients in this position, it's understanding what connections are you going to retain to New Zealand when you go overseas. And then that may dictate whether or not you'll still be considered to be a New Zealand tax resident, or whether you're going to be considered to be a non-resident. Now, if you still retain a New Zealand tax residency status, then you'll still be subject to worldwide taxation effectively, subject to application of any double tax treaty agreement of the country that you're going to. If you're going to become a non-resident, then likely you'll only have a taxation obligation for New Zealand in respect of any New Zealand sourced income. So common scenario, someone may have a family home and they rent that out when they go overseas. naturally that's New Zealand sourced income. So regardless of where they are in the world, New Zealand will always have a taxing right over that income.
Do they also need to be prepared to pay New Zealand sourced income, tax on New Zealand sourced income in overseas, in case they become a overseas tax resident?
Yeah, well, that's the thing. So let's just say the person's going to the UK, common OE destination. When they arrive in the UK, usually once you've spent 6 months in another jurisdiction, you'll trigger a tax residency status in that jurisdiction. Now, if you become a non-resident for New Zealand tax purposes, New Zealand will still have a taxing right over that New Zealand sourced income, but because you've also triggered a tax residency status in the UK, you'll be considered taxable on worldwide income from a UK perspective. But then under the double tax treaty agreement between New Zealand and the UK, you'll receive a tax credit in your UK tax return for taxes paid on the New Zealand income in your New Zealand tax return.
So they really need to plan well before they go.
Yeah, I think it's understanding, particularly coming the other way, which I think we'll talk about a bit later on, when people are coming into New Zealand, is understanding just the particulars of each country's residency rules. And certainly there may be tricks or traps that you really need to be aware of to take advantage of or to avoid in the case.
Do some planning and make sure you minimize it.
Yeah, and it's certainly a lot easier from my perspective to be assisting in the planning process. You know, sort of you're standing at the top of the cliff as opposed to the ambulance at the bottom.
True.
You know, things have already happened and you're basically in recovery mode, and how can we help you out of the situation you've got yourself into?
Right. Danny, can you see any immigration issue there?
Oh, it really depends on what sort of category they're looking for. Immigration process is quite complex. It really depends on the kind of visa. I would say fundamentally, people who wanting to come to migrate to New Zealand, a good health and good character prerequisite for a successful application. It really depends on what sort of visa application they are looking for. So we can talk about later.
This is New Zealand kids going overseas, so maybe not that relevant with New Zealand tax,
that's right.
Immigration law.
This is Richard's specialty.
True. So the second question we have is that's relating to people migrating to New Zealand. So once the border open, we should see that migrates coming through. So what would be your biggest advice for those people who migrate to New Zealand?
Okay, that's a good question. So as I mentioned before, fundamentally people have to meet two major criteria: a good health and good character. And if you are a professional, like a lawyer, like myself, or a medical doctor, he or she must register with the relevant professional bodies, like New Zealand Law Society. Otherwise, I'm afraid he or she are unable to practice in New Zealand. Another advice is that if English is not the applicant's first language, I think he or she might consider studying English and try to achieve a reasonable level of English in the IELTS test. Bear that in mind, 6.5 is the minimum for those who are applying for the work visa under skilled migrant category.
That's sound. So what you're talking about, if you are professional, try to migrate from one country to the other, make sure you check, you register with the professional body of the destinating country, right? Yeah.
Cool.
Cool.
Very important.
Richard, in terms of tax, for those people migrating to New Zealand, what's the first thing they should do, or once they get here, or what they should consider?
Yeah, I think you know, from past experience, one thing or one lesson learned would be to get advice even before you book your air tickets. You know, understand when you may be triggering a tax residency status in New Zealand. And because we also have what's called a transitional tax residency status. So either when a person has never been to New Zealand before, or they've been away for an extended period of over 10 years, then, and as long as they haven't claimed the exemption in the past, when they come to New Zealand and they trigger a New Zealand tax residency status, then they can be entitled to essentially a 4-year waiver on foreign sourced income, other than personal services income and employment income. So in other words, if in the reverse scenario, so a person coming from the UK to New Zealand retains their property in the UK to rent out, now under our transitional tax residency rules, for the first 4 years, they will not be required to return that UK rental income in a New Zealand tax return. So I think planning is really key in doing it in advance. Understand which of our 2 residency rules you may trigger. As I said before, we have the black and white personal presence test. So once a person has been in New Zealand, physically present, for more than 183 days in any rolling 12-month period, so it's not calendar year, it's not financial year, it's just any 12-month period, they've spent basically 6 months in New Zealand, and there could be like a scoping trip when they first come, and then they go back to the UK for a few months, and then they come back in again. You might have to take that first scoping trip into account. But if they're considered a tax resident under the presence test, then once they've been here for 183 days, it'll backdate to the first day of presence. But equally, as I said before, the overriding test is permanent place of abode. So if they come to New Zealand and they buy a home straight away, then potentially they've triggered a tax residency status from the day of buying their home. And again, it'll be effective from that date. So just a bit of planning, and in our case, understanding, I had an unfortunate scenario where someone had already booked their tickets and they were going to land here within 6 months of being outside of the country for 10 years. So they were not going to qualify for the transitional tax residency regime. Now, unfortunately, they couldn't change their tickets, and this was all during the recent COVID situation. So they basically had a place booked and managed IQ, which they didn't want to miss out on. Pre-planning is the key thing, I'd say to people.
So even they may feel that I do not have any issue, but it pays to talk to someone that.
Yeah, and certainly, another key point I always ask is, what's your tax residency status of the country you've just departed from? Are you still going to be considered, say, a tax resident of the UK or Australia or Japan? And at the same time, you'll trigger a New Zealand residency status. So then you'll be considered a dual tax resident. And then we need to look at the tax treaty. And there's usually what they call a tiebreaker test within that tax treaty, which will determine which country will tax your worldwide income and which country can tax your sourced income.
So your advice is they should meet you as soon as they're landing in New Zealand.
Yes.
That's cool. The other question is maybe more to Dennis. Can I come to New Zealand and set up my own business under some category?
Yes, of course. New Zealand always welcome business operator to come to New Zealand to set up businesses. Taking this opportunity, I would like to talk about an entrepreneurial visa. Under that category, applicants can come to New Zealand to set up a new business or purchase 25% of a business in New Zealand with a minimum capital investment of $500,000. There are other criteria. The applicants must have relevant business experience for the proposed business, and because he or she have to present a business plan to Immigration New Zealand at the time of application. Once they approve, they have to work according to that business plan. The other criteria includes they have to able to offer or employ 3 full-time staff. The staff must be either New Zealand citizen or resident, they must actively involve in the business or self-employed in that business. Another criteria is English language is one of them. Minimum score is IELTS level 4, and however, there is no age limit for this kind of category. This is good. I would like to turn to the benefit or the advantage. The key advantage is that if the business is run profitably and also in accordance with the business plan, in 6 months' time, the applicant may apply for residence. This is a pretty short period. However, the entire period between the entrepreneurial visa and resident visa must not be longer than 36 months. So that means within 36 months, you have to apply residence. Okay, and another benefit is if the business is related to ICT, that is information and communication technology, or high-level innovative, or high-value export-oriented business, the investment, the capital investment can be reduced to 100,000 instead of 500,000. That's really attract young IT entrepreneurs.
That's pretty good.
Mm-hmm.
Danny, do you think, because was this, we all talking about a big talent shortage, right, at the moment, because the door closed, talent hasn't come in for the past 3 years.
Yes.
And then when the door opens, maybe our kids will flee for OE. So this will create even more severe labor shortage in New Zealand. Do you reckon that the government is going to open these general skill category visa or not? Like they need to do something, they really need to do something huge or dramatic to resolve the problem, right? But yeah, one of the biggest thing they can do is open the immigration. So can you foresee any of this kind of things happening?
Well, it's hard to foresee the government policy, but I would say yes, the answer is yes. New Zealand is a migrant country, immigration country. New Zealand need people, capable or skilled people to come in to set a business or to work in New Zealand, to promote the economy as a whole. I would say it is necessary for the New Zealand government to consider, try to find a way to attract more people to come in. And actually, New Zealand just launched, recently launched, it is a second stage about, I don't know whether you guys have heard about 2021 resident visa program. And the government has already offered, including applicants and their families, about the target is 165,000 people, skilled migrants who are during the COVID, they are working in New Zealand. They offer them quite generous, condition, or make it more easy for them to stay in New Zealand.
Oh, so they've already had a policy.
Yeah.
But is that enough? Maybe not. 150K people.
165,000. This is estimate, including applicant and their family. But
how do they make it for those who flee?
It's hard to say whether it is optimal or enough or not enough. It really depends on how the economy's growth and we're talking about supply and demand, But in my view, I always welcome the New Zealand government to open up its door to attract more capable business people who like to invest in New Zealand, because, as I said, New Zealand is an immigration country. We need more capable people doing business and working in the economy.
Okay, that I think it's safe to say people should keep an eye on this field
Yeah, of course.
to see
yeah,
the new
yeah.
policy coming that,
Mhm,
to open the door for more people.
mhm.
So, so each of you have been practicing your field for long time and then be successful. Can you then share maybe one of your clients' successful story with us?
Richard.
Start with Richard.
I think the best one I've had in recent times was classic scenario with your own clients. In fact, Chinese common case will be that the family will come to New Zealand. Mum and the kids will normally stay here for the education of the children and look to settle in New Zealand, but dad will often go back to China and retain his connections there. Often there's there's a desire, I guess, not to have to pay New Zealand tax on the Chinese income because it's the father's connection is mainly with China as opposed to New Zealand. So we tested out the whole theory around whether just because your wife and kids are here, does that necessarily trigger a permanent place of abode for you as well?
Mm.
And we approached the revenue with our background to this case, and we were successful in basically coming back and saying, yes, we agree with your conclusions that dad, in this case, because of, yes, he's potentially got an abode available to him in New Zealand, but it's all around the permanency of that abode. And we were able to argue successfully that his minimal trips to New Zealand was not a significant or sufficient connection to go over the permanent threshold. And therefore, the revenue were quite happy that he was still considered to be a non-resident for New Zealand tax purposes.
Wow, that's harder to achieve.
Yeah, it's good. It's
It's a good story to share. How about you, Danny?
Yeah, I have quite a few interesting
You
stories
won't have to feel
It really depends on time. But me start with this one. It's quite interesting. About 10 years ago, I have a client who is citizens of Samoa, a Pacific Islander. And this gentleman at his young age, he's now middle age. As a young age, he arrived in New Zealand with on a work visa. And while working in New Zealand, he committed few offenses, unfortunately, including driving with S, a couple of offenses, drink driving and assault. Worse still, he did not renew or had not renewed his work visa at the time when it was due to expire. I don't know why. And luckily, surprisingly, he was able to grab a job in the factory, working in the factory, where he met his partner, a local lady. But on one day, the lady approached me. We had a good conversation, asking the possibility or try of regularizing or legalizing the partner status. After we review all the documents, I said, yes, I can do my best to help you. There is a reasonable prospect of success in my view. And I launched an application on behalf of this gentleman for a work visa, along with a medical waiver request. It was about, I recall, about 6 or 7 months later, I followed up this case with Immigration New Zealand. I talked to the case officer about the progress of this case. And he was quite surprised. The case officer says, oh, Danny is quite positive. And actually, the case was being reviewed by a second officer. This is the standard procedure, a second review, before granting any visa. And I was so excited. And the case officer promised to get back to me within that day, I say, oh, that's great. After a couple of hours, I received an email from the case officer confirming the grant of a resident visa to my clients. I'd like to add something before closing. Is this couple? I mean, my client, the gentleman, before the partnership relationship, he married to another lady. I mean, they both, including the lady, have previous marriages and with their own children before. That means they form a very big family, about 7 children altogether, with both the marriages of people, including previous marriage and current marriage. And when I talked to my client about this extraordinary news, they are so excited and said, oh, and asked me, hey, Danny, could I come to your office to see you? I said, yes, of course, and went about, I think within 1 hour, they arrived to our office, and I was really shocked to see such a big group of people, including 7 children, and the parents, 2 elders, and also jammed in a small meeting room. And the lady, who instructs me to do the job, and first come to me and shake my hand and express heartfelt thanks to me. I could see it clearly in her red eyes, and it was followed by the husband. And then the couple introduced to me each and every single member of the family, who offer heartfelt, gratitude to me. It was so touching. It was such an incredibly inspiring date. I left feeling so satisfied and motivated. I think this, probable this successful application does have a probable impact on the entire family. I'm humble and delighted to by this successful application of my work.
Yeah, as professionals, I think the biggest satisfaction is the gratitude from
not only money, sometimes.
And you can help decent people to get decent result. I think that's really good.
Yeah.
Thank you very much for sharing this with us. And also, Richard, before we start this, we open a question to the floor. So we've got a question from one of our clients.
Right.
So her question is, she's a New Zealand PR and her partner is a New Zealand citizen. So they have a New Zealand property here, they're going to rent out. They're going to, for OE, So she's planning, so that's good. Before OE, she's planning already. So 2 scenarios. One scenario is she went to a country, OE country, and working for a local company there, and then get to the salary and whatever paid to a local bank account. The other scenario is she's got to offer a New Zealand company that may be happy to send her to that destination and then pay her New Zealand salary in New Zealand bank account. So she's wondering whether there's difference in terms to her international tax.
Yeah. Well, in essence, it comes back to what a lot of the things I've already said. So the first thing I'd be looking at is she going to trigger a tax residency status in the country she's heading to? More than likely, if she's going to be there
more than likely to look
period of 6 months,
yeah.
Is she going to retain a New Zealand tax residency status? she's obviously got a permanent place of abode already. She's already a New Zealand tax resident. Clearly, if she goes away for 325 days within any 12-month period, that potentially triggers a non-residency status. But the overriding connection of that family home will need to be considered. And of course, the longer she's away from New Zealand, then the less of a connection she'll be deemed to have with that property, but it won't be instantaneous. Now, presently, the revenues view is if you just rent your property out, they do not consider that home is no longer available to you. So simply putting a tenant in your home can still mean you've got a permanent place of abode. Now, that's under the New Zealand's domestic view. When it moves to considering a dual tax resident view, so in other words, established tax residency in another country, still tax resident of New Zealand, and then when we look at the tiebreaker test within the double tax treaty agreement, the first limb of that tax residency test is, do you have a permanent home available to you in both countries? Now, here the revenues view changes, and it aligns to the OECD's recommendations, which is if you've legitimately tenanted your home property, it is no longer available to you. So certainly having a New Zealand home when she goes away that's rented out, it can still create some tax residency issues for her. I think in this case it'll be a matter of determining the application of the double tax treaty. And in that case, it may therefore favour the country she's going to, because the first limb of the test would say she no longer has a home available to her in New Zealand. She's likely to have a home available to her in a foreign jurisdiction.
Now, she's thinking about China.
Okay. Yeah. Now, in terms of the employment income, now if she depending again on her tax residency status, so if she retained a New Zealand tax residency status and under application of the double tax treaty, New Zealand was seen to be her tax resident jurisdiction, then regardless of the employer situation, whether it was a New Zealand employer or a Chinese-based employer, she would have to return that employment income in her New Zealand tax return. Now, if the tiebreaker test goes the other way, or she loses her New Zealand tax residency status, then naturally she'll file that income presumably in a Chinese tax return if it's in a Chinese employer. Now, from a New Zealand employer perspective, because she won't be exercising her employment duties in New Zealand, then her New Zealand employer will not actually have any PAYE deduction obligations. So, which she will need to make them aware of. So she could end up in a situation where she's only paying her tax on the employment income in China. But certainly the rental income from New Zealand will be taxed under either jurisdiction, in New Zealand under either scenario.
So she may work from home for a New Zealand company. So New Zealand company may not have any presence in China, but she works at home in China for New Zealand.
Yep. And under that, because the employment is exercised in China, it's not exercised in New Zealand, even though she has a New Zealand employer, so that her salary payments are coming from a New Zealand company. There's actually, New Zealand has no taxing right over that income in terms of PAYE deductions because of where the employment has been exercised. Now, of course, it'll come back to her overall tax residency status, whether she still has to include that employment income in the New Zealand tax return.
So her employer in New Zealand, potential employer in New Zealand needs to check out the potential tax liability in China. That's the...
It needs to understand their obligations. And the Revenue's recently put out a guidance document on New Zealand employers who have people who are working offshore, and in terms of that employer's New Zealand PAYE or payroll tax obligations.
Yeah, that will be more and more common because now the employment with the travel restriction, more and more people just hire people globally, so that becomes quite.
Yeah, and I quite often get inquiries coming the other way, where the employee is coming into New Zealand and they've retained a connection with the offshore employer. So it's the same situation, understanding that employers, that foreign employers, New Zealand tax obligations.
Cool. Thank you very much. I think we've covered a lot of things, and then it's a lot for people to think about that. Thank you very much.
Thank you.
Thank you.
Thanks.
Thank you.